Alright guys, so I had to make some adjustments in my portfolio. In this video, I want to go ahead and share with you guys my top stocks in my portfolio. Plus, I've changed my strategy around because the market has been going crazy. The market has been extremely volatile over this last week. The stocks in the Dow Jones have been climbing back up, so value stocks are increasing. But at the same time, stocks in the NASDAQ and the technology and growth stocks have been taking a hit. In the NASDAQ, we were up at 14,000 points and now we're down to about 13,000. And in the Dow Jones, we are sitting pretty at this point at 34,000. But I will say, guys, with this, I have made some changes in my portfolio that I want to go ahead and share with you guys in this video. But before we go ahead and go into that, I do want to go ahead and show you guys my portfolio. I do have one big issue with this portfolio because first time ever this year, this portfolio is actually in a negative. But as far as just being fully transparent and sharing with you guys this portfolio on a week-to-week basis, my current value in the portfolio is sitting at $113,082. I'm down $404 or 0.36%, and that's just in the last day. In the last week here, guys, we're down $5,375 or 4.58%. In the last month, we're down $15,988 or 12.87%. Last quarter, we're down $20,000 or $20,480 to be exact, or about 17%. And then all time, this is where the bad news is. This is the first time in about a year I have actually seen a loss in this portfolio. Obviously, I was expecting that this could happen, and with the market and with some of these growth stocks taking a hit, that's why this portfolio actually went down, and that's why I've changed my strategy around a little bit just to focus and diversify myself a little bit more here. So we are actually down $176 all time in this portfolio, or 0.28%. I will say though, at the same time, I am not concerned. I am really bullish in regards to the stock market. I am still focused on dollar cost averaging every single week in this portfolio. Plus, if I just show you guys as far as my earned dividends, as far as this portfolio goes, if I didn't have these earned dividends, I would be in a lot higher of a loss. So I have had a total of $1,497 just in earned dividends in this portfolio. Now, as we go ahead and look at some of the changes that I have made, if we go ahead and look at the slices that I have with M1 Finance, and by the way, if you are interested in M1 Finance, I do have a $30 affiliate link. Check out my description down below for that. I love this app. It keeps me very disciplined as far as my trading strategy goes. Now, just looking at this, as we can tell, the growth stocks are the ones that have been hit the most. My growth stocks actually changed my strategy around at the beginning of this year, where I went ahead and added to my growth stocks and I created a growth pie. Before that, I was purely focused on dividend stocks, but unfortunately, it's probably the worst time to go ahead and do that. So I'm down about 40% in just my growth stocks. So that's where the biggest loss is coming from, and I'm down about $15,342. But given that, here's what I've kind of done at this point is I've reallocated my portfolio to have 45% allocation towards growth. I've increased the allocation to technology, and I've kept my allocation towards the other buckets here, which are purely dividend-based stocks, at about 30%. So really what I'm really focused on here is to preserve some of my cash and focus on stocks that don't fluctuate as much. I'm still extremely bullish in all the growth stocks, and I'll share with you guys some of my top stocks here. But as far as just the overall stock market goes, I don't want to see too many big losses, and I do want to have some cash flow. So 45% is going to be going into early stage companies that are really the innovators, companies that are extremely early that I see a huge potential for, and really just generational companies. Now, the technology sector is going to be my mid-growth type of stocks. These are going to be stocks that still have potential to grow, but they don't have exponential potential to grow. But at the same time, looking at this portfolio 20 years from now, very bullish on these. And then the rest of these sectors, going from financials, communication services, real estate, consumer staples, discretionary, utilities, and healthcare, all of these are purely going to be dividend stocks, meaning that they are building me cash flow. Now, if I go ahead and look at this, I'm focused on growth in this portfolio, but I'm focused on dividends as well. The growth is if one of these growth stocks goes ahead and climbs a lot, it will pay me out extremely well. these stocks have potentials to go ahead and 10x. Basically, anything that I have in this growth pie, I believe has a potential to 10x in the next 5 years, and at the very least in the next 10 years. But here we go, guys. These are the stocks that I have, and it's not going to look pretty, but hey, I want to be fully transparent because not everything looks pretty in the stock market. There is times you'll have losses, and at this point I am losing a bunch of money in the market, but I am doubling down on all of these stocks. I'm very bullish. I'm going to keep investing in every single one of these. But I do have Tesla as one of my larger positions in this portfolio. My current value in Tesla is about $16,250. I am down in this company right now, but this is 37% of my overall allocation in this growth pie. From there, I'm pretty bullish on these next 4 stocks. I have a 4% allocation on Peloton, 6% allocation on Roblox, 6% allocation on Coinbase, and then 6% on Airbnb. Now the market is going to be up today, but this is my overall losses in these stocks. But at the same time, I'm extremely bullish on all 4 of these stocks. I believe these are generational companies, with Peloton just having a second to none brand, with Roblox really trying to innovate the gaming industry, with Coinbase, a whole new asset class that Coinbase is really getting new users and people that are just beginning on their crypto journey involved. It's one of the easiest apps to go ahead and use. And Airbnb is a travel play, but I love Airbnb. I was looking out for the stock as soon as they IPO'd. Now, some of the other stocks that I have is CrowdStrike and Shopify. Bullish on both of these stocks as well. I believe both of these stocks have huge potential for growth. Shopify is one that I'm looking to go ahead and probably add a bit more to. This is a stock that I am bullish on, but I still need to do a bit more research, but I can see my allocation increasing in this stock. But both of these currently are allocated at 4%. And then guys, from there, all the other stocks that I have 3% allocation in this portfolio. So from there, I have Netflix, Square, Lemonade, Zillow, Uber, Twitter, Pinterest, Etsy, Teladoc, C Limited, and Spotify. Now, as we can tell here, all of these stocks have a unique approach. They are the industry leaders in their sector, and they all have a 10x potential. For example, with Lemonade, they're trying to reinvent the insurance industry. With Teladoc, they're trying to reinvent the whole health industry and basically how people go ahead and visit doctors. With Spotify, they're focused on reinventing the whole music industry. So these companies are really ahead of the curve when it comes down to growth, but because of the change from growth to value, all of these companies are currently down. So I have made some adjustments in this pie, and I have decreased the adjustment to 45% allocation in this pie, because what I did is I did go ahead and increase my adjustment in the technology pie. Now, as far as technology goes, I'm up $3,837 in this pie, or about 31%. But I did add a brand new position to technology, and the position that I added is Google, and I am currently down about 5% in this, but I just recently added to this, and this is a stock that I'm actually gonna keep on investing in throughout the rest of this month to get my target allocation to about 12%. But I'm very bullish on Google, very bullish as far as seeing their most recent earnings. I do believe with YouTube, what you guys are watching me on right now, there's a lot of potential. I think YouTube can actually grow quicker than Netflix, and YouTube's revenue is probably going to increase a lot faster than Netflix. So very, very bullish on this company. This is the most recent stock that I added in this portfolio. But as far as the technology sector, I have Apple in here at about 64%. This is one of my most bullish companies in this overall portfolio. Huge believer in the ecosystem here. As far as Nvidia, love the stock as well. As far as when there is a chip shortage, Nvidia has a lot of opportunity to go ahead and grow in the chip sector. Microsoft, another great company that I really like. Microsoft is really well diversified. And then lastly, Google. So I did go ahead and increase my technology sector allocation to 25%. Now from there, as far as some of the other sector goes, I've actually reduced down some of my stocks in some of these sectors to really focus on the stocks that I can keep up with and stocks that I believe will still grow in the next 20 years, but not necessarily looking at what they're paying out in dividends right now, but more or less looking at the future growth potential. And as they grow, their dividends is obviously going to grow as well. And with the strategy of holding on to this portfolio for about 20 years, these are the stocks that I'm extremely bullish on. So as far as financials go, I do have two stocks in here. I have JP Morgan Chase. I do have $4,417 allocated in this one, and my target allocation is 60%. And then I have American Express, $2,897 in current value, and about 40% target allocation. Now from here, I do have communication services. Communication services, I basically have two companies. Both of these companies I do believe in and I do use. I have Disney in here. With Disney, they have a lot of potential, even though recently their streaming service numbers and their earnings came out and they did not hit their goals as far as their subscribers for Disney Plus. But again, with their ecosystem, with all the different characters that Disney has, I still believe there's a huge growth potential, especially looking at this company in the next 5 years and how much they're going to grow. And as their businesses come back with the Disney parks opening back up, as well as with their cruise line. And I have AT&T, who is my wireless provider, and AT&T still pays out a pretty solid dividend. I've been buying this company since it was around 7.5% to 8% in dividends, and currently is paying out a dividend of 6.29%. So I'm very bullish on both of these companies in the communication sector. Now from there, I have real estate. Real estate, I basically have two companies. Both of these companies are going to be focused on the consumer side, where these are going to be large landlords that are in the retail space, and where these companies have triple net leases, so they get paid out. They can go ahead and keep their costs down once they've done their initial improvements to the site, and basically the tenants just pay for everything from there on. So these two companies are both basically in that same business. With Store Capital, they're focused on more smaller business and mid-sized businesses, and with Realty Income, they're focused on a lot bigger businesses like the Walmarts, like the Targets, like the Home Depots, even some of the movie theaters. So my target allocation in both of these is with Store Capital, 55% allocation, and with Realty Income, 45% target allocation. Now jumping on from here, and actually before I go ahead and jump on to the next one, as far as why I really like REITs and why I really like both of these REITs is because they do pay out a solid dividend, and I don't see their dividend going anywhere anytime soon. With Store Capital, they're paying a dividend of 4.27%, and then with Realty Income, the dividend is pretty similar, 4.27%. So I do like this for cash flow. These companies are just paying me out cash on a quarterly or monthly basis, so I'm going to keep growing my position in those companies as well. Now in consumer staples, I do have a couple companies in here with Costco and Cisco. Now both of these companies, again, huge believer in. With Costco, they just have a very strong customer base and a strong ecosystem. I have 50% allocation split up in both of these, and with Cisco Corporation, as restaurants and the retail sector opens back up, this company has a huge potential for growth, and I'm very bullish on this as a long-term strategy. So these are going to be the two in consumer staples. Now going into consumer discretionary, the companies that I've narrowed down to in here is going to be Nike and Target. Nike, I have 60% allocation. Again, another very strong brand and a strong ecosystem. And then Target, I have 40% allocation. Both of these companies, again, are just cream of the crop when it comes down to their branding, when it comes down to the long-term potential for growth. And they both pay out a dividend, so I like both of those. And then lastly, guys, I have utilities and healthcare. And utilities, I basically have one company. I used to have a lot more companies in here. I used to actually have Dominion Energy in here, as well as Duke Energy. But at the same time, as the Biden administration is really focused on renewable energy and focused on giving incentives to renewable energy resources and companies that are really focused on that, I really like NextEra Energy. They are the cream of the crop when it comes down to renewable energy. They are the number one company that's focused on solar energy, wind energy, and they're really just ahead of the curve when it comes down to all that. Now they do pay out a nice dividend with 1.96% as far as their dividend yield goes. So at the same time, while there's growth potential, still getting some cash flow coming in from there. And then lastly, guys, in healthcare, I just have one company, which is going to be Abbey. Now, Abbey is a company that I've been investing in. I used to have Johnson & Johnson, but I just don't see the growth in Johnson & Johnson like I do with Abbey. Abbey, I'm up 45%, or my current value is $1,655. But guys, these are basically going to be all the different stocks. And with this new strategy on focusing on narrowing down on my companies as far as the growth potential. I do believe there's growth potential with all of these companies, but also focusing on cash flow. So in general, this portfolio is split up into 70-30. I would say 70% of the stocks have huge growth potential, which would be the growth and the technology pie, and then 30% would be the rest of the pies here, which is purely focused on a dividend-based strategy and just focused on building me additional cash flow. But as I like to do every single video, guys, I like to be fully transparent, share with you guys everything I'm doing in this portfolio. Right now, I do have a buy order on my growth pie. So I have $250 that I'm allocating to these stocks, including Tesla, Spotify, C Limited, Teladoc, and Etsy. Now, I did recently do a deposit in this account, so I have about $5,000 that's sitting on the sidelines. In case the market dips a little bit more, I may go ahead and go a bit heavier as far as my investments go. The stock market as of today is currently up, but overall for the last week it has been down, and I do believe that NASDAQ has the potential to go down another 5 to 7% from here. So if that does happen, I am probably gonna go ahead and go a little bit more aggressive and maybe double down during that week as far as my overall investment goes. But hope you guys enjoyed this video. If you guys are interested in M1 Finance, they are doing a limited time offer. You do get $30 when you go ahead and sign up with them. And hopefully this video was helpful, guys. If you like more videos like this and you want to keep up with the journey, don't forget to subscribe to the channel down below. And if you guys have any video ideas for upcoming videos, let me know down in the comments below. But thanks again. I'll see you guys at the next one.